Dr. Babasaheb Ambedkar Open University.
Hello, warm welcome all of you. As we are discussing cash books since last many video lectures, as we understood single columnar cash books, two columnar cash books as well as three columnar cash books in the past few video lectures. Here today we are going to discuss about the bank book as well as the petty cash books. So bank book, it means that in the case of any organizations have more than one bank account and only the bank transactions are to be recorded in the books of accounts. So how it would be recorded in the books of accounts, that's one thing. Second, the another, sometime maybe organizations have some small kind of expenses, and small expenses, for that they need amount maintain a regular small cash book also. So that is called the petty cash books, where the miscellaneous expenses to be adjusted and miscellaneous expenses to be accountable in regular basis in the organization. That is why the petty cash book has been prepared. So in this particular video lectures, we will focus important things like introduction of bank book as well as the petty cash book. Then we will try to understand how the bank book is prepared, what are the important things which are the features of bank book, advantages of the bank book, what are the advantages of bank book, why we are preparing a bank book, and the what kind of helping understanding when you are preparing a bank book so far as organization is concerned. Transactions recorded in the bank book, how it would be recorded in the bank book, as well as we are try to understand the petty cash books, the importance of petty cash books as well as the impress system of petty cash book, advantages of this system, as well as at the end we will try to understand the examples of both bank book as well as the petty cash book. So let us start with this. The first is introduction of the bank book. Every organization performs the numerous financial transactions every day, that we knows that. Ultimately only financial transactions will be recorded in the books of accounts, whether it is a credit or it is related to a cash transactions. But simultaneously the cash transactions have a banking transactions also. So then how it would be effect? The transactions involve receiving money and it will be paying money, receiving money from the customers, or pay any kind of a payments to be made to the supplier, or maybe a depositing cash, or maybe withdrawing a cash, or maybe the amount of direct deposited in bank, or maybe you are paying directly to the customers through the various new banking system, like consider as a part of an online transactions or a UPI, or maybe transfer through IMPS or something like that, RTGS and all. So all these transactions are actually recorded in the specific books of accounts, and that is why we are preparing a special bank book for the same. Now here all these day-to-day expenses and transactions are recorded, which are specifically related to a bank, to prepare the specific bank book. To record all this transaction systematically, then we are preparing a specialized accounting. One is the bank book and the other one is a petty cash book. So there are two different transactions which we are actually preparing. For banking transactions we are preparing a bank book, and for the regular expenses or routine expenses or a miscellaneous expenses where the some cash will carried by the cashier, cash on hand in the organizations, and the expenses which are actually incurred by the employee of the organizations, or it will be a reimburse and adjust the accounts through paying cash to the person who spent the money. It's for that they are maintaining a petty cash book. So all those transactions will be recorded in this particular book. Now here how the what are the importance and how the features is actually identified through the bank book. The bank book is a specialized subsidiary journal. So it is a kind of a subsidiary book where we need to identify only those transactions which are related to a bank. So bank transactions will be recorded in this particular specialized book, and the banking transactions like checks, electronic transfer, deposits and direct debit or maybe credit. All these transactions directly recorded in the bank account, and its effect bank balance through this particular transactions, definitely we need to understand the immediate bank balance, or maybe you can find out the bank balance on spot, so that you can identify through the particular bank book when you are recording all these transactions. And the dual purpose, it will be actually justified from this bank book, because of one is the bank book when you are preparing, that is actually recording all basic transactions like a journal entries recording in the bank book, but the another actually feature also added to this particular, you don't need to posted all these transactions into the ledger accounts and open the bank ledger accounts in the ledger book, because of the ultimately bank book is providing a facility of a closing balance at the particular specific or a stipulated time. So, you do not need to prepare ledger accounts of bank in the ledger book. So, that is why it is considered, it is a dual purpose is actually served when you are preparing a bank book. Exclusive scope is what? The exclusive scope is that exclusively banking transactions like NEFT, RTGS, UPI, IMPS, any receipts and payment transactions that we will actually identify, captures and recorded in this particular bank book. Then real time balance, it means the after immediate transactions you can find out the balance and you can compare with the bank book easily, that you can find out the difference and what will be the check of balance also to be easily identified. So, that's considered it's a real time balances. It is kind of a bank reconciliation statement also, easily you can make it, because of when you are comparing the transactions which are actually directly effect to the bank book, as well as it has been missing out to record in the bank book, you can easily record the transactions in the bank book also, and that's way the bank reconciliation statements also helping to identify the missing transactions also. And one more thing, as we were actually trying to understand, that is providing a facility of a dual purpose. One is when you are actually recording the basic transactions in the bank book, that is kind of a journal entry, and then it serves another benefits also. You don't need to prepare the ledger posting for the same. The ledger is automatically reflected through the bank book, and closing balance will be reflected through the bank book. No need to prepare the ledger separate account in the ledger book. So, these are the basic features of the things. Now, advantages of the bank book. First is it's complete the transaction record, the maintained systematically and ensure the zero missing entry across the digital channels. So, it means that whenever you are actually having any kind of a digital transactions or a UPI transactions or any transactions which are reflected directly in bank, simultaneously it reflects in your information also. So, you can immediately record it in the bank book and then you can compare. So, there will be a possibilities of fraud, or maybe a possibilities of missing transactions, recording entries, or by mistake also some transactions actually missed out to record in the books. That will be a very less chances are there to miss out the transactions to record in the books of account. So, ultimately it would be considered as a complete transactions record. Instant balance verification, that means you can easily cross verify the balance with the bank. Suppose if you missed out some transactions to record in the bank book, but when you are going to check your online balances, or maybe you are downloaded your statement and verify the balances, real time balances, and compared, easily you can identify the balance differences, and then you can also identify the missing transactions which are recorded in the bank book, but that means recorded in the passbook but not recorded in your bank book. So, you can easily compare and you can find out the balance also. Internal control. Definitely it's a kind of an internal control, because of it is a providing of a strengthen of corporate governance. Why? Because of all the transactions are recording in the books of accounts. There will be a zero tolerance and zero possibilities of missed out the transactions. So, in that sense you can easily evaluate that how many number of transactions takes place during the day or maybe during the month, and all the transactions were reflected automatically in the bank account, but some transactions missed out in your bank book record by the accountant, then automatically you can record those transactions which are missed out easily. So, that is through the physical cash handling, and through the physical verifications you can find out. So this is the way that you can easily strengthen your accounting systems and accounting procedures also. Error reduction, it means sometimes maybe the transactions happened and you by mistake recorded on the other side. Suppose if you are make a payment to the party, right, it's your balance should be reduced, but by mistake you were actually recorded on the receipt side and showing that it is received payment. So when you are actually verified this balance and verification of the passbook and cash book, easily verifications can be done, and then you can rectify your error also. So that is the way, not only the rectification of the side recording, or maybe the amount recording, or maybe missing the entries, any kind of mistakes can be easily identified. So error reduction is also possible very fast. Streamline the financial accounts. Where it streamline the financial accounts? Because of at the end of the a specific period, you can easily identify your closing balance, and directly the closing balance can be recorded in the balance sheet. That's, you don't need to prepare separate ledger accounts, as we already discussed earlier, that you can easily find out the closing balance at the end of the bank book period, and immediately it can be shifted into the balance sheet. Audit facilitation accelerates internal and statutory audit through the clear digital payment trails, and all these digital payment trails you can compare with your bank book, which are recorded or not, and easily you can find out the comparisons, and then the mistakes or audit facilities also can be very strengthened. So these are the advantages to prepare bank book. Now the transactions recorded in the bank book, how it will be recorded in the debit side as well as the credit side. So debit side is considered a receipt. There will be almost similar kind of structure. It is a subsidiary book. Receipts, it's a debit. Payment, it's a credit. Like 3 columnar cash book and 2 columnar cash book. Here it's only the difference is 2 columnar or 3 columnar cash books, where we are preparing cash, bank and discount column, or a cash and bank account. Here, instead of the cash and bank or a cash discount or a bank discount, only the bank column on each sides will be there. So maybe if you have a single bank, only the Bank of Baroda or a State Bank of India or a Union Bank or XYZ, HDFC or any bank, each side the bank column will be there, whatever the banks you are actually having. Or suppose if you have a more than one bank, then each side all the banks column will be preparing instead of the other column along with the bank column. So that's the first thing. Now if you are depositing a cash in the bank, then only it will be showing when you are depositing a cash, your bank balance is increasing, so it's considered on the receipt side, it will be entered, and cash deposited will be considered. Suppose if you are withdrawing a cash from the bank, then cash definitely cash balance increasing, but that will not reflect in bank book. Only the bank balance reducing through the cash withdrawing. So bank balance reducing, so it will be recorded on the payment side that cash is withdrawing. Customer checks, whenever you received the check and deposited in a bank, it will be recorded on the receipt side because of the bank balance is increasing. So that will be recorded on the receipt side. When you are issuing a checks for the payment, it will be recorded on the payment side. Bank credits, any amount of income credited by bank directly, like an interest credited or XYZ, it will be recorded on the receipt side because of due to this credit item, your bank balance is increasing. So income will be receiving by you directly recorded in the bank, consider as a receipts. Reverse, in case of any charges or any interest will be debited in your account, so bank balance will be reducing, so it will be recorded on the payment side. Any online transactions takes place, or maybe if you get the directly credited in your account, some UPI transfer or maybe some IMPS transfer or some any RTGS or NEFT or anything has happened, amount has been actually credited in your account, it's your receipts. So that would be considered later on when you are able to get this information, you have to record on the receipt side. So reverse, in any kind of payment happened through the online transactions will be recorded on the payment side. So this is the way to record the transactions in bank book. Now let's discuss one example how this transactions recorded in the books of accounts. Here we are discussing from the following transactions, prepare HDFC Bank and Bank of Baroda column bank book Messrs. Three Traders. So this is the bank book of Messrs. Three Traders. And if you are going to see, as I already told you, it's the same kind of format. Only the difference is what, instead of the cash and bank column, we are preparing two bank column on each side, whereas we have two banks. One is Bank of Baroda and the another one is HDFC Bank. So both the sides we have HDFC Bank and Bank of Baroda column. That's it. Other remaining columns are as it is, no change at all. Okay. So instead of the bank column, here the specific bank name is written, Bank of Baroda and HDFC Bank on both the sides. Now take it one by one transactions. First is opening balance, both balances only. Opening balance HDFC Bank is 30,000 and Bank of Baroda, Bank of Baroda we are having an overdraft. So ultimately one is opening balance recorded on the debit side, other bank opening balance will be recorded on the other side because of it's an opening bank overdraft. It's not a bank balance, as we discussed in the last video lecture. If you have a balance, the balance brought forward on the debit side. In the case of overdraft, balance will be brought forward on the payment side. So here 2026 April 1st HDFC Bank is balanced, so two balance brought down here in HDFC column 30,000, Bank of Baroda dash because of they have an overdraft. So on a payment side 2026 April 1 balance brought forward in the Bank of Baroda column 8,000. Next, received a check of rupees 12,000 from Ramesh against sales and deposited into HDFC Bank. So ultimately received a check from the Ramesh against the sales and deposited in a bank. So which bank is received? HDFC Bank is receivable. So HDFC Bank account debited to sales account. It will be recorded in the bank book, date 3, sales account in the HDFC column 12,000 rupees. That is directly deposited in a bank. So that's why it's recorded in a HDFC column, Bank of Baroda dash. Next is April 5, purchase goods worth rupees 18,000, paid 8,000 by HDFC Bank check and 10,000 by Bank of Baroda also check. So we purchase the goods, but payment has been actually divided. Some payments made from HDFC Bank and some payments were made actually from the Bank of Baroda. Ultimately, both the payments were made by the different banks. So payments you made, so it's your payment side actually by purchase account. So the date is 5 April 1st by purchase account. How much you paid through HDFC Bank? It's an 8,000. So HDFC column 8,000 rupees and 10,000 check were given from the Bank of Baroda. So 10,000 will be recorded in the Bank of Baroda column. Next is April 8, paid office salary 6,000 by HDFC Bank check. So salary is an expense, salary expense account debited, paid by HDFC. So HDFC is a giver by HDFC Bank account. So on the payment side, date 8, by salary expense in the HDFC column 6,000 rupees. I think it is very easy when you are actually try to understand the logic behind it, how these transactions were recorded in this book. So automatically the transactions will be clearly defined and recorded in the books. So, and at the end, as I already told you, the closing balance is very clearly reflecting here. So you don't need to actually find out again recorded these all transactions in the bank book and cash book. You don't need to prepare the bank book account once again. This balance directly transfer into the balance sheet. Okay, moving next is Bank of Baroda credited interest on savings account 700. So Bank of Baroda has offered you a 700 rupees interest. It is your income. So that means it's they are credited in your account. So definitely it's considered as an income and recorded on the receipt side. The transactions dated on 10th and interest is in your income. So to bank interest account and in the Bank of Baroda column 700 rupees. Next is received a check rupees 20,000 from Suresh towards outstanding dues and deposited into a Bank of Baroda. So now we received 20,000 rupees from Suresh and we deposited into a Bank of Baroda. So Bank of Baroda is a receiver and Suresh is a giver. So date is 12 to Suresh account and the amount will be written in the Bank of Baroda column 20,000 rupees. Next is issued a check of rupees 5,000 from HDFC Bank and deposited into a Bank of Baroda. So issued a check 5,000 from HDFC Bank and deposited in Bank of Baroda. So it's an interbank transfer, right? So ultimately one bank is receivable, another bank is payer. but ultimately it's an internal transactions of the organization, but still one bank balance is reducing and other balance is increasing. So we have to write this entry in the books of accounts. It's a contra entry. So now the date is actually 15, issued by HDFC Bank. So HDFC Bank is a giver, deposited in Bank of Baroda. So Bank of Baroda is a receiver. General entry is Bank of Baroda's account debited to HDFC Bank account. So on the debit side, the date is 15 to HDFC Bank account, contra entry. So that's why see, write down in Bank of Baroda's column 5,000 because of the Bank of Baroda's balance is increasing. On the other side, you can say on the date 15 by Bank of Baroda, contra entry, but write down 5,000 on the HDFC column because of paying 5,000 by this bank. Next is purchase office furniture of 15,000 and paid by Bank of Baroda's check. Ultimately furniture purchase, its furniture account debited to Bank of Baroda, April 18 by furniture account and paying through Bank of Baroda column 15,000. Paid electricity bill 2,500 through HDFC Bank, again it's an expense, electricity expenses account 2,500 in HDFC column because of paid through HDFC check. Purchase machinery worth 40,000 paid 60% by HDFC Bank check and remaining amount Bank of Baroda. 40,000 60% it's 24,000 and remaining 16,000 paid through Bank of Baroda, but this is purchase. So ultimately to machinery by machinery account date 25, 24,000 paid through HDFC, so 24,000 in HDFC column and 16,000 rupees paid by Bank of Baroda will be recorded there. Bank charges of 350 were debited by HDFC Bank. It's a charges for certain reason, but it's an expense for us. So here the date 28 bank charges in the HDFC column 350. So all transactions were recorded in the books of accounts. Now we have to make a total first one by one bank. We'll make a total of HDFC Bank on the receipt side and then the payment side, and then we'll find out which side is higher. Because of it is quite possible maybe a bank balance or bank overdraft. That's why yes, it is payment side is higher. So ultimately the payment side is higher. The difference is actually consider it's an overdraft. So that's why the payment side total higher on the debit side. The difference is on debit side 3850. It's considered an overdraft. The same way the Bank of Baroda also, the payment side total is higher than the receipt side. The difference is 23,300. It is also an overdraft. So ultimately at the end of the month we have a bank overdraft for both the banks, and then it will be carried forward in the month of May, in the first May, that is bank by balance brought down on the credit side of that. So this is the way to prepare the bank book. Moving to the next part, that is petty case book and the impress system. How the petty case book is actually prepared and what are the requirement of this. So just if you are going to see this, the petty case book is actually precisely designed for minor and small expenses like a day-to-day expenses or a miscellaneous expenses. Most probably those all expenses are cash expenses only. 99.99% are cash expenses only. Why? Because of it's a routine transactions or regular transactions like tea expenses, purchase of stationery, maybe a rickshaw or a taxi charges or something like that. So which are paid by your employee in cash, and those employees which are actually paid in cash on behalf of the organizations, they will come to the cashier to reimburse those expenses which are actually incurred for organization, not a personal expenses. So these are the expenses which are actually takes place, and then it has to be adjusted. Impress system is like ultimately the cashier actually issued some amount of a floating cash or a fixed floating cash on hand to start the petty cash book. So ultimately the cashier issued the some amount to rotate these particular transactions in the business, and then the whatever the amount were actually carry on hand, that will be adjusted through the petty bills and log vouchers on a daily basis. And at the end of the day they will just find out the things. As I mentioned that the expenses were takes place in the organization, but it was incurred by the employee who paid on behalf of the organizations. They come to the cashier, they submit their vouchers along with if they have any kind of a supporting documents, then the all expenses will actually reimburse, and then it will be adjusted against the petty expense account. Now here advantages of the Impress system, that is ultimately you can control the cash. First is how you can control the cash, restrict the volume of cash held by the petty cashier, strictly limiting maximum financial exposure. So it will be restricted, the how much cash expenses can be adjusted against the petty cash book, what are the basic rule to adjust the petty cash expense account. So understand that the small amount of petty cash expenses only can be adjusted here, and that is the way the controlling of the cash expenses also. Fraud preventions, that means any misuse and unauthorized spending through the mandatory voucher reconciliations to be possible, because of so what happens sometimes employees are actually putting their unnecessary vouchers to adjust this particular transaction. So there are certain rules and regulations, what kind of activities to be done by employee on behalf of the organizations, what are the limitations, how much amount to be paid in case of any expenses to be incurred by the employee on behalf of the organization, and that amount of vouchers can be reimbursed also. Then another thing is the time economy ultimately relieves the head cashier from handling hundreds of the petty cash vouchers and saving valuable leadership time. So because of all the time, if you are going to consider the regular transaction instead of the petty cash transaction, the very small amount of transactions which are 100 and 200 daily transactions takes place. So all the time maybe you have to identify the transactions, sign the transactions, authorize the transactions. These things are actually a very tedious things. So that's why it offers a petty cash book, and the transactions will be adjusted by the cashier through the regular transactions to be happen on daily basis, and then all those transactions at the end will be considered on a miscellaneous expenses total amount and will be directly posted into the ledger. So instead of this all small transactions recorded in the books, that the total transactions at the end of the month or at the end of the specific period will be directly transferred. So these are the advantages of Impress system. One more is audit readiness. That is also, as you prepared the petty cash book, easily can be audited through the vouchers, and you can match with this, and the transactions can be verified easily through your petty cash books. Also how much cash on hand were actually there. So both account can be easily matched, and then very easy to audit all this transaction. Now moving to the next point, what is the format of petty cash book? It's quite different than the bank book or a single columnar cash book and two columnar cash book like this. Ultimately the receipt is happened once till the all receipts may be utilized. So first is receipts, the date is to be written here, the how much amount of receipts is there, and what is the informations, that informations will be write down here. Then onwards, the whatever the payments you made, you have to write the dates one by one, and then particulars to for what purpose the payment is made. In case of any vouchers are submitted, then vouchers will be there. Then in case of one vouchers having a multiple expenses, all expenses will be written here, and the total amount of the each particular transactions will be write down here. Then the posting of this particular transactions, I am talking about this transactions posting will be here, and then it will be considered as a part of an expense. So ledger folio and then informations will be write down there. So one receipt, then all payments. The payments, different kind of expenses. I am putting here some examples like carriage, postage, stationery, tea, and other miscellaneous expenses. There might be more than this also. So it depend upon the how many types of subsidiary sub expenses are there. So that column you can prepare here, and then you can make a total amount column also there. Now let's see the example. There are so many examples. I'll just explain few examples here, then you can understand how the petty cash book can be prepared. The first is opening cash balance with the petty cashier, 4,000 rupees. So here the first transaction, opening cash balance, and you can write down 4,000 on the receipts column, date October 26, 1st October. We are preparing petty cash books of Sri Mahesh Bhai. So petty cash book of Sri Mahesh Bhai, 1st October, the 4,000 opening balance, and then also the cashier received 2,000 rupees in petty cash. So that's why from chief cashier we received 2,000 rupees from the petty cashier on the same date. So 2,000 added on the receipt side. Now October 2, 900 rupees paid for stationery. So date 2nd we paid for stationery, so it's a stationery expense account. 900 will be the total column, and in the stationery column will write 900 rupees. The remaining all column dash. So 900 rupees paid for stationery expense and it is total. 150 rupees paid for carriage. So 150 rupees paid for carriage, date is 3 by carriage expense. The total amount is 150. In the carriage column 150 rupees. The next is 350 paid for tea and refreshments. So October 4, that will write October 4 by tea and refreshment expenses. Amount is 350, the total 350. Tea and refreshment 350, all remaining column dash. The next is 280 paid for postage and courier expenses. Date is 5. So we'll write here the date is 5 by postage and courier 280. In the postage and courier column 280 rupees, remaining all column dash. Then 1000 paid to Rakesh towards salary advance. It is given as a salary advance. So here we are giving a cash, so that's why it's written in petty cash book. When we are giving to a Rakesh, so date 6, Rakesh 1000 rupees, it's actually paid in advance, the total amount, and it will be recorded in personal account in the ledger 1000 rupees, correct. 200 paid for carriage, 500 paid for sundry, 180 paid for postage, 250 paid for tea, refreshments, carriage. So these are the petty expenses. You can see in the various dates here we are paying for carriage, sundry expenses, postal, tea and refreshments, all will be recorded in the separate column like this, correct, and the total of the each transactions will be write down here. Now at the end what we have to do it, that is more important. Suppose all the transactions done, and now what we have to do it, we have to make it the total of each column, each particular expenses column, and the total should be here also, that this total should be matched with this total with this total. So it means that the individual expenses total also should be tallied with the total amount paid by the cashier for the different expenses, and at the end the what is your receipt, the receipt total will be here 6000, payment total is here, the receipt here also as per the cash book, the petty cash book cannot be in negative. So what happened is the total amount of cash payment will be always lesser than the receipts amount. So 6000 it's a receipt total, 5330 it's a payment, the balance is 670. So that balance will be carry forward in the next month. So here the 670 October 16, so 15th is last date, so 16th October balance brought forward 670 rupees on the receipt column. So this is the way to prepare the petty cash book. Here in this lecture we just try to understand how the bank book will be prepared. So in case of more than one bank, it is similar like a 3 columnar cash book or 2 columnar cash book, only the difference is both the side the bank column is prepared and transactions will be recorded. Again simple transactions of bank or maybe a contra transactions of the banks also recorded in the books. Petty cash book, it means the small amount of expenses incurred by the organizations also recorded in the petty cash book, and at the end we will just find out what will be the change of petty cash book which is actually held by cashier. I hope you understand all these books properly. You will have to do more practices in both the kind of books and having a more clarity also. Thank you so much.